it's not ideal for the consumer if you buy a car today and then 2 months from now you see that car advertised for $6,000 less than you just paid.
For many years, the automobile industry has provided more than simply a means of transportation. It has also come to stand for freedom, status, and the height of human ingenuity. But as this business goes through a seismic change, it is changing in ways we never thought were possible. We have stunning news to share with you today that will surprise both business people and motor enthusiasts. The biggest automobile crash in our lifetime is going to occur as a result of a flood of supply reaching the market at a time when consumer demand is fast cooling off, claim experts, who claim the biggest car price bubble in history has been rising for the past 3 years. Both new and used car costs are at an unsustainable level, and the crash has already begun. In fact, we've identified a few models whose prices have already fallen noticeably today. Dealer markups helped the average price of new and used cars rise over a period of more than 2.5 years. Automobile manufacturers have increased production to boost profits and at long last meet consumer demand, despite the fact that demand for automobiles continues to exceed supply and keeps vehicle prices at all-time highs. Today's circumstances are considerably different. According to data from the firm, astronomically high prices became unaffordable between January 2021 and January 2023, which is why the average price of a new car was once more less than the sticker price, increased by a remarkable 52%, whilst new cars during that time, the median household income in the United States climbed by 13%. Due to the widespread pricing out of purchases, analysts have warned that a crash is unavoidable. Although a big correction has already started to occur, the upcoming collapse is expected to be unlike anything we have ever witnessed. A recent UBS research predicts that this year's global auto production will exceed sales by 6%, creating a surplus of 5 million cars that will need price reductions to leave car lots. In a letter to clients, according to Yahoo Finance, UBS warned that given the optimistic production schedules, there is a significant risk of overproduction and heightened pricing pressure at the present. Manufacturers are reportedly readying for a price war, with some of them already slashing prices. The Model X lost almost $14,300, or 23% of its value in the EV market, and we predict that it will expand to the combustion engine segment during the second half of 2023. Tesla's most recent price reductions for its new automobiles are the best example of this. The brand's used car prices have fallen since the start of this year. Used Model 3 cars, for instance, seem to be the hardest hit by the ongoing downward trend given their average price. According to iCars.com, the price dropped by $11,000 to $75 last month, from $51,251 to $39,976. Infiniti QX80 used car prices decreased by 22.3%, from an average of $52,874 in 2022 to $41,094 in April of this year. This is as a result of a $12,000 decrease in the average price of the massive Infiniti SUV on the used car market. A competitor of the Infiniti QX80 is the Nissan QX80. The Armada has had a considerable price decline this year, whereas the used model's average selling price last year was $41,770. It is currently reported to sell for an average of $33,300, a 20.3% decrease. Additionally, the researchers discovered that used models of the Land Rover's mid-size Discovery SUV are currently offered at an average price of $48,000, down 19.9% from the average price of $59,000 they had a year ago. Another well-known car that is expected to receive major price drops is the new Nissan Frontier, which is now priced around $39,833, but is predicted to drop to $27,146 by the end of 2023. A 3-year-old Toyota Camry that is presently selling for $27,000 is expected to cost $16,548 by the end of the year. Well-known used SUVs like the Jeep Compass, which is marked down from $25,000 to $15,700, are subject to similar restrictions. The Honda CR-V from $31,893 to $19,599, and the Toyota RAV4 from $32,562 to $21,534. Despite the impressive corrections that have so far taken place, it's important to keep in mind that used car values have increased by an astounding 88% since 2020. According to Barron's, auto dealers claim that repossessed cars are being sold at auction with buyer loans to values or LTV ratios topping 130%. But that is only a conservative estimate, since LTV had discovered that value is the gap between the loan amount and the vehicle's actual value. Barron singled out one dealer who was providing percentages at 140%. A new Land Rover acquired today at a high premium will keep only a small percentage of its worth in 5 years, since it will have depreciated if supply continues to rise and prices decline. Simply put, a lot of people will lose a lot of money. But hey, government officials say there's a silver lining in all this car market crash, and it will at least help to bring the inflation they created themselves under control. It will be a breath of fresh air for consumers. But for those who signed extended leases at high interest rates, the result will be quite catastrophic. Earlier this month, even JP Morgan released a study forecasting the average used car price would drop by 8% by the end of this year. According to Jonathan Smoke, who agrees with the bag's strategy, output should start to stabilize and improve by the middle of this year, making monthly payments easier to manage as prices decrease. Grant Piper, the sales manager of Tom Tinsdale Chrysler, Dodge, Jeep and Ram, claims that this is already a reality. What I see in this area across the board is a sharper drop than dealers were expecting, he said. Cox Automotive's Chris Frey, senior manager of economic and industry analysis, predicts that things will only get worse from here, and he pointed out that the 16 months of annualized drops we experienced during the financial crisis, which averaged 5.8%, are quite similar to what we're currently witnessing. The car market is experiencing a severe recession, and sales volumes and car prices are falling significantly, not only in America, but across the globe. According to Goldman Sachs experts who stated in a letter to clients last month, it is plausible to predict that the upcoming collapse will be equally unusual, given that the value of vehicles soared by 88% in just 3 years. Which is as signs of a car market crash continue to emerge in March, and unpredictable volatile outside factors threaten to make things even worse. It would be prudent to continue to defend ourselves during the storm and wait until the tsunami has passed before moving forward. This is especially true if we fall even deeper into a recession. In order to restore some sense to the market and prevent this problem from getting worse in the upcoming months, a correction in the US auto market is now long overdue. All we can hope for is that this will happen sooner rather than later. Billion-dollar car values are probably going to be destroyed in 2023 and beyond. But this is just the tip of the iceberg. With a recession at our door, the ship might capsize in a heartbeat. And with that, we close today's video. What are your opinions on this? Feel free to share with us in the comments section down below. Thanks for watching.